This week, the US equities market saw a wild volatility, and it was indeed a wild ride because the S&P 500 dropped by at least 10% in the trading week before even, retreating. Now, I've seen some recovery, but in terms of my trading portfolio, I was able to make back some of the money that had caused my portfolio to drop. Because if you recall, I was almost $1,000 down, and during the trading week, I saw my portfolio unrealized loss go down to almost $1,600. And as the week progressed, NVIDIA, which I was holding through NVDX, it bounced back, and I was able to actually exit with a loss of about 330 US dollars. And I also did another trade for Palantir on Thursday, and I made about 130 US dollars, and it actually narrowed down the loss that I had made. But throughout the whole process, I had a lot of lessons that I'm going to unpack. But before we get started, let me just show you some of the highlights of my portfolio. And in the interest of full transparency, I always like to say this is just a video that I'm sharing for entertainment and educational purposes, even though I am trading my own money. This is real money. And, I can tell you that sometimes I even feel the emotions, but as a trader, I'm learning that it's very important to actually detach from those emotions, because sometimes when you see your portfolio down 7% or by even more, the temptation is to possibly exit. And trading and investing are different, right? And that's why I like to trade securities that have strong fundamentals. And in some cases, I trade the VIX on the volatility, but I want to get in, like I've said on this channel, when I think the risk level has significantly dropped. That is when the VIX is now around trading at its all-time lows, and most likely the market, from my experience, will have kind of like repriced in, right, whatever the information that is available, and there would be a good possibility for it to spike should there be something that is unexpected. Now, the interesting thing as I open this is that if you recall, last week, like I said, this was almost 979 US dollars, but let's just read it in Canadian dollars. You see that I was down almost 7%, but now you can see that I'm back up 13.81% since I started trading on this portfolio. And what has been the highlight of this is that, look, when I am trading, I mostly want to be in cash. I want to get in and get out. That has been the strategy that I've been using. And you can see here that this week, what I did is I managed to close the position. And last week, when I shared with you, that was the situation, 965 US dollar loss and at 700 shares. But what I ended up doing, I added 200 shares, and that lowered the average price from, it was actually initially $10, 50 around there, and now it was almost $9, $9.50, I think, right, when I added more shares to make them 900 shares. And that allowed me to get out. But now, after I got out, NVIDIA went up, and NVDX, it actually closed, I think it was around $9.84 on Friday, March the 14th, the last time that I checked. What that means is if I had held, I could have still actually made some profit. But unfortunately, that's where trading psychology comes in. And at the end of the day, that's something that is very, very important when I'm trading. But key lessons from this were that, number one, in my trading, I think I was a little bit, it was tricky, because I remember I got into this position when it was pre-market and I wanted to get in and get out. But I saw the profit was little and then the market just started dropping. But usually I am someone who likes to cut the losses and move on if the trade doesn't go well. But this was a classic example of how emotions can actually cause you to lose. Man, unfortunately, NVIDIA at this point is still a fundamentally strong company and it was able to bounce back. I saw it even went up above $120 a share on March 14th. However, imagine a scenario if it had continued to go down. Now, that's one thing. But I also managed to recoup some of the money because I used the covered call strategy. But NVDX, it doesn't have a lot of volume. So I only made $90. I kind of like used that strategy. And that's one of the strategy that I'm going to be using because I'm realizing that in this bearish market, using covered calls, it protects the portfolio from a downside swing. And if it goes up, still, if assuming the strike price or my average cost would be lower than the strike price, I could still make the profit being that average buying price and the strike price. Let's say if I got in at NVIDIA at 120 and I put the strike price of in 2 weeks of $130. So I would still make that 1,000 if I have 100 shares. But if I have a covered call, I would be paid the premium, let's say $200 upfront. So in other words, I would make 1,200 if it hits $130, right? Or let's say in those 2 weeks that I would have as the expiry for that contract, it gets to 135. I would give up about 300 in that case. But if it dropped and it closed at below 130, let's say 125, I would keep the premium. And when I keep the premium, still I could roll it over. In other words, I could get the other premium, let's say another $200 for the next 2 weeks. So what this is doing as this market, becomes volatile, and as long as I believe that this is a fundamentally strong company, I would be getting paid for holding this stock whilst it is going down and down and down. Unfortunately, the thing is that if let's say it then goes up to 150, like I said, you lose the upside. But in a highly volatile market where President Trump at any given time could just come out of the White House or wherever he's speaking and say something and the market drops, I think this is one strategy that I'm going to be employing. Now, key lessons is I think it's very important to manage the risk properly, but also understand that at the end of the day, losses are part of the trading game. And I should also understand that it's okay to lose some of the money. And if ever you take a trade and you are sitting on the edge of the table, like one of my mentors said when I was trading options initially, he was like, each time that you take a trade and you're sitting right on the edge of the table, it means you are taking way too much risk. But in this case, it was like almost 6,000 US dollars that was on the line. But NVIDIA, even though it's fundamentally strong, it's not a nice thing to see the portfolio dropping. But again, you really have to be smart about this and to manage the risk. So I'm going to be now again using options to hedge my portfolio, from risk. Now, I know some people might be wondering, like, if you have any questions, feel free to reach out to me and subscribe so that this video can go wide and far. But the goal for me sharing this, obviously, this is a very small portfolio, but for me, it's something that I am learning and I'm hoping to see how I am going to be, like how much profit in terms of percentage level in terms of my annual return. But one thing that I will say is I have been withdrawing some money from this portfolio actually. I withdrew $150 into my cash account. And also, like I said, I withdrew some money, 100 US dollars. I didn't quite check on my bank account the other 100 Canadian dollars I had sent. It had not yet arrived in the bank account or been deposited. But at the end of the day, the goal for me trading is from time to time, I like to take some profits off the table, right? And probably what I would do is I would say maybe if I hit a certain threshold, I'm just gonna take a small percentage of the profits, but that's gonna affect the portfolio in a way, but I'm not going to withdraw much because at the end of the day, I have some business expenses because when I'm trading, I create this content, I have to pay for some of the things that I use, the softwares and stuff that I use for this journey. So that's it. When you are running a business, I'm not yet making money on the social media, yes, yet, but I'm hoping probably this video will go viral. So please hit like, smash the subscribe button so that this video will go viral, and I'm hoping to see you in the next video. But until next time, please trade and invest wisely, and make sure that you don't trade or invest money in a manner that you would regret. Always manage your risk. At the end of the day, trading and investing comes with the risk. I'm always the first one who is upfront and honest about it. I just gave you an example. I took a hit, 330 US dollars. That's a lot of money for a lot of people, including even for me, right? But the good thing is, if you balance the money that you make and the one that you lost, net, my portfolio is still almost 14% up since December last year when I started trading in this account. Again, I'll see you in the next video. Have a wonderful week and bye bye for now.